All right, good morning, traders, and welcome to the opening bell. Today is Thursday, May 7th, and I'm Michael Boutro, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you. The markets are still in an optimistic view, although we are still in a wait-and-see approach, waiting to hear back from Iran with regards to the demands that were made with the peace agreement on that one-page agreement. We have stocks trading higher, still trading into fresh record all-time highs. We got gold trading higher, oil trading lower, U.S. dollar trending kind of wandering a little bit, but still towards that low. Euro still towards the high. Dollar Swiss right at support. Lots of levels to look at as we head into tomorrow's non-farm payroll report. We'll go over all the U.S. dollar majors and gold and oil. Any other questions that you have, feel free to throw them on the message board. We'll be getting started in just a moment. All right, great to see everyone here in the room. Ahmed's here, Ashish, Frank, Yana, Maury, Patricia, Robert. Great, the whole crew is here this morning. Great to see you guys. So here's what the DXY looks like as we open up the U.S. trade session. Again, things are on a positive note. You saw the Nikkei in overnight trade just rip as well. So the tone and the sentiment is positive as the earnings continue to come in positive. The straight, no escalation while we haven't gotten a response yet. Seems to be just keeping an even tone. But here's the US dollar. We haven't broken that 618 retracement. Again, that's the retracement off the lows for the year, which is the next level down. It converges on downtrend support basically into the start of next week, into the close of this week. So we'll see if we get the move or not. Initial resistance. Now look back at the monthly open. It's 98.12 is what these dots are right here. 98.12 into 98.24. That's the objective yearly open, right? So initial resistance, bearish invalidation. We had it at 98.78 into the start of the week. Based on slope at this point, we can go ahead and drop that to the 200-day moving average, just a bit lower. It gives you 98.57, 98.56. Comfortable just putting that as sort of the cap on this near term. Keep in mind that's also the objective weekly opening range high. So any way you slice it, a topside breach above 98.55, let's call it, would be objectively would give you a near-term topside bias. That's the if we find support here. The end of the day, the major support target still 97.50, converges on slope. Beyond that, you're risking resumption of the broader March downtrend. The next level down comes in at 96.88. So certainly the last key hurdle, as it were, for the bears before really opening up the spigot here and kind of pushing the gas on the drop. So looking to see what kind of reaction we get if and when reached. Based on that, tomorrow's non-farm payroll report is expected to come in about 60,000. Okay. Remember, that was an outlier, that 178 that we got previously. Average hourly earnings expected to uptick to 3.8% year on year, 0.3 month on month. Unemployment rate's not on here, but that's expected to hold 4.3%. So all things held constant, we're still in this. Oh, and by the way, earlier today, we did get initial jobless claims coming in at 200,000. So the expectation was for 205. That continues to keep the jobless count contracted, right? So we're still in this low hiring, low firing environment, which casts the spotlight squarely on the other side of the Fed's mandate, which is going to be the inflationary outlook. Next week, we do get the consumer price index. That inflationary read will be another update as we head into the start of May trade to see how the price growth picture looks. But on the back of that Fed decision, I'm not sure there's going to be much of a shift there unless we see a major increase in the inflationary outlook. Look, there was some commentary earlier today I was reading with regards to Warsh. The question is not, is he going to be able to come and cut? I think the market's squarely, based on what the CME Fed Fund futures are showing, and just based on what the metrics are at current stance, the markets are squarely showing no interest rate cuts at all this year. Even into December, it's basically 17%, right? So the question is not whether he's going to cut or not. The question is, does he step into the role of Fed chair and actually consider hiking. Because as we get out deeper, and I showed you guys this earlier in the week, as we get out deeper, the expectations start to surmount into next year for potential of a hike. And this has been wishy-washy and wobbling on both sides for the last couple of weeks. So that's going to be squarely determinant on what the inflationary picture looks like. We get an update on that tomorrow. We get an update on that next week. Tomorrow we get those non-farm payroll figures released at 8:30. We'll cover the aftermath here in the room, but keep that in mind. Any downside thrust, 97.50, that's the pivot. That's the real choke point for this decline off the March highs. Okay, so that's the DXY. Here's what Euro looks like. You saw us pivot above the yearly open, 1745, and yesterday we were looking at this on the pullback. It actually did hold support. Here's still another bounce off that level. The problem with Euro, look, it's still constructive. The problem with Euro is that the major pivot resistance is still 1826, 1813. The 618 extension off the low, the 618 retracement of the year-to-date range, 1826, 1814, caught the highs last month. That's still critical. So even if we continue higher from here, like for new exposure, where's your stop? If you're holding long exposure, a good idea, kind of raise protective stops, get a little bit more defensive. The real choke point is up here at 1813, 1826. That would be right in line with basically a drop towards 97.50 in DXY. So some relativity there on similar price action. So just added this slope here earlier today. This is just a basic parallel off the lows from last week. And this week, if you add a parallel of that and extend it to that swing high from last week, it actually caught the weekly high and it converges on uptrend resistance. So just another technical factor to highlight this key pivot range between 1813 and 1826. Northbound of this, you're threatening resumption of the broader uptrend, basically 1919, 1918. That's the 2025 swing high. So real critical here. Initial support still 1745. Weekly open comes in just a little bit lower at 1730. I wouldn't want to see anything below the weekly open if we're heading higher, but proper bullish invalidation, guys, is the same as it was into the start of the week. It's the same as it was last week. It's 1670, 1667. Into 1681, this zone right here, the 38 off the low of the year, that swing high from March, 100% extension from the decline, the 200-day moving average, all of it converge right in this spot. So near-term choke point, yeah, watch the weekly open, but for the bears to reassert control, you would need to see that push below 1667. NFP's on tap tomorrow. Questions on Euro? Not the sexiest setup from a standpoint of like new exposure. Same thing on the British pound. So yesterday we were talking about 35.98, 35.93. I wanted to see what the daily close was going to be to validate this breakout. We actually did pull back and close back below it again. So we came into the start of the session today saying, well, all right, well, is that an exhaustive break or are we actually going to make it? Here's another push higher. Remember, that 36 levels, the May high, the August highs from last year, the 618 retracement of the decline off the highs of the year, so the year-to-date retracement, and those swing highs here from April into the close of the month. We literally closed above it just by a couple of pips, then we slammed lower, haven't been able to do it ever since. Let's see what happens here today. We've been talking about the ongoing divergence. Let's see if RSI buckles that. If it breaks that high, that would invalidate the RSI signal. Till now, it still exists. So we need to see some clarity here. We need to see some clarity here on sterling. Here's what it looks like again on the 4-hour chart. If this was a legit break of the weekly opening range highs, the weekly open, we'd want to see support here. More or less we did. We did close below it though. So look at this near-term consolidation. If we break the highs, look for resumption towards 36.85. That's the high week close of the year. The 2025 high day close, the 2022 high give you 37.45, 37.49. That's the upside shot. Initial support still 36, let's call it 35.93. Bullish invalidation, we have to still keep it right at the weekly low, 35.12. If we get below that, that's going to invalidate the slope from late March, and that would suggest the potential for another test of that key support pivot that we were in all late last month before that last rebound. So look, it's a breakout of that January downtrend that we saw back last month. That advance is now looking a little tired on building divergence, little vulnerable, but we're just in the early throes of the monthly opening range. Let's see how this pans out. Losses should be limited to 35.93 on this pullback, real near term. If we're still heading higher, you're still constructive above 35.12. Topside break looks for 36.85, 37.45. Obviously, guys, as always, it's not a trade recommendation from FOREX.com or StoneX. My humble interpretation of the technicals here, but this thing is coiled right below, right around hurdle, straddling rather resistance. We're looking for a clear breakout here to give us some directional clarity. Here's Aussie. So the break looks legit. The break looks legit. So we've been talking about 72 and how critical of a region that was. That's the 100% extension from the advance off the 2025 low, the 618 from the decline off the 2021 high. Favored fib confluence. Last 3 weeks has been resistance. Here's the breakthrough. Now, the weekly close is going to be the solid proof, but we got the daily close yesterday. So while above 72, 72.08, 72.13 to be exact, you're kind of looking for the extension potentially towards 73. The next level up is 72.95. That's the 2019 swing high. And then you have the 618 extension from the advance just off the low that you made in November, gives you 73.08. Both of those levels converge on uptrend resistance over the next few days, looking for a reaction there if reached. Now, momentum has kind of started to break the fever a little bit. Remember, we've been talking about the fact that momentum has been making lower lows, lower lows, lower lows, as price has been making a series of higher highs. Now, momentum is finally breaking to a new high here. So it's kind of breaking, again, that fever that we were looking at, waning momentum. Here's what it looks like on the 4-hour chart. Not quite into overbought territory yesterday. I was looking to see if we can attain that, but we'll take it. We're still pretty constructive. So look, this near-term advance just off the weekly range gives you the 618 retracement at 71.90, just below 72. That's what we have as near-term bullish inval. Okay, initial support 72. Ideally, the weekly open comes in at 72.03, and then the 618 comes in at 71.90. So it's clustered down here. But max wouldn't want to see anything below that 618 if we're heading higher. Key resistance 72.95 and the 73. Note that on the daily chart, that's the larger uptrend resistance. On the near-term chart, this is just a pitchfork just off the low from April. It's also the 75% parallel. Perfect touch, converges on that level into the close of this week, into the start of next week. So some time reference there as well. So Aussie dollar looks like a confirmed break, but the real test is on the pullback. 71.90 needs to hold support if we're heading higher. 73 is the next major hurdle on the upside. NFP's on tap tomorrow. I'm going to keep saying that. Any questions on Aussie? Okay, pick up the pace here a little bit. Dollar CAD at resistance or just below 36.50. It's the level we talked about yesterday. We almost got close to it, but didn't quite get there. It's the 618 from the drop just off last week's high. It's also that 786 extension of that pitchfork we've been tracking off the highs from April. So same formation. The lower parallel of that extension caught support. Here's the upper parallel of that extension converging on a basic 618 of a range. 36.50's key resistance here on dollar CAD. Looking for a reaction there if reached. Here's what it looks like on the daily chart. Keep in mind that 36.49 is also the basic 236 of the entire decline off the highs from March. So you have the 236 of that multi-month decline. You've got a basic 618 of just the weekly decline. Both of them highlighting 36.50. Converges on slope. Look for a reaction there heading to the close of the week. Now, tomorrow you get NFPs and Canada employment data released at 8:30. Double whammy Friday. And we'll see if that has any catalyst to give this thing kind of a kick off that level. A breach above that level, a daily close above that level would at least suggest that a near-term low is in place and that a larger recovery is underway, larger resistance, more significant resistance, a pivot that you guys have all heard about for the entire year is 37.25 into 37.33. Again, this yearly open, the 38.2 of the drop, the August, September lows, all of it converge right there. Monthly open support checked yesterday, in fact, was 35.81. That's not only the monthly open, that's now pretty darn close to the weekly opening range lows. That's the break now that, if broken, would sort of invalidate this move here and mark potential resumption of the multi-week downtrend in dollar CAD. But it's all contingent on what happens near 36.50 if reached. Make sense? Big event risk tomorrow with both of those employment figures released at 8:30. Dollar yen. I'm in the process of writing the weekly report for dollar yen right now. It's going to be out later this afternoon. Look, for dollar yen, this is actually a pretty big test. Here's the weekly chart. Haven't changed anything. Same exact levels. Okay. So the major resistance zone 160.21, 160.73, that held. That's been holding since March. Here was a rejection last week. Massive outside weekly reversal off of fresh yearly highs, and resistance is now testing key support. That support range is kind of large, but nonetheless, 54.78 into 55.40. You're talking about the 618 of the year-to-date range. You're talking about the yearly low week close. So the week that the low was registered, the close of that session gives you 54.79 into 55.40. That's key support. We've already checked it. Basic uptrend support, 2 points speculative, 3 point confirmed. Almost touched it back here in January, February. Here we are again, same slope. So something's got to happen here. Now, overnight, the IMF came out and warned against intervention to Japan. Okay, basically, if you intervene more than 3 times in a given period, your currency is basically seen as not a free floating currency anymore. It's just a floating currency. It's like a downgrade, basically. My colleague Matt Weller did a report about this earlier today. So they're basically making that threat. On the other side of that, also, it has to be said that they're seeing still diminishing returns on every leap back into to intervene to the markets. So does that cause them to back off, or does that kind of make them grind in even more? We'll see. At the end of the day, from a technical standpoint, this is a key pivot zone. This is a key pivot zone. This is the break that would ultimately break the resolve of the dollar yen bulls, right? Especially off the low from April of last year. Drill down deeper. Here's the daily chart. The 4 hours a mess, but here's the daily chart. Basic slope support just off the lows from April. June, tested again in September, tested again in October, right there. 618 off the low, right there. The low week close, which isn't here on the daily chart, but let me just bring it to you, comes in right there. So this is the zone we're talking about. We went into it yesterday, pulled back dramatically. Now, you did mark divergence on that low. So here's price action, lower low. Here's the oscillator, higher low. Both of those reference points closer to 50. You gotta be worried here. You gotta be worried about continued downside in dollar yen. So here's the 4 hour chart. Don't have anything necessarily to give guidance on here, guys. Just looking to see if we hold this support or not. One thing I was looking at earlier today, and just as a reference point, if we do break lower, the 100%, the 618 extension rather comes in at 54.70. Okay. The bottom end of that range on the weekly chart is 54.78. So again, you know what I'm saying? Like, this whole region is just clustered with key technical considerations on top of the slope we're looking at from the April low of last year. So look for a reaction here. Look for a reaction here on dollar yen. Downside appetite should be limited from this point. So should upside. Obviously, I don't want to test the BOJ, but if you feel compelled, that's the pivot break you need to really open up the next downside leg in dollar yen. Last but not least, dollar Swiss. Mesfin, I see your question there on Kiwi. We'll take a look at Kiwi in just a moment. Just want to highlight dollar Swiss is at support. I shot a video for StoneX TV about this earlier today. 77.72, 77.75. That's the objective low from last month, and the 618 retracement from the advance off the lows in January. So it's the year-to-date range. If you look at dollar Swiss on the weekly chart, this is absolutely critical. The last 3 weeks, 4 weeks, basically, this is the 4th consecutive week, but the last 3 weeks, the lows have registered right around there. You can see how pivotal of a zone that was on the break lower back in January was resistance in February until the final breakout there in March, then was support. Key pivot, and that would invalidate that uptrend from January. So dollar Swiss is talking in, or is checking major support. Here's the weekly, the daily chart. That slope off the lows. It's only a 2-point touch, so I'm not really stressing it. Although yesterday we did close just above it. So it just puts added emphasis on a reaction here at 77.72. And again, the last month's low, swing low, was 77.75. So we're checking that level right now on this pitchfork off the high. That's off the tertiary high here, the third high they made in April. The median line is right there. So you have slope, subjective. You have lateral levels, objective, last month's low, and the 618 retracement. Not up for debate, not my opinion, fact, converge right here. If this breaks, potential for downside resumption. The yearly low week close comes in at 77.30. The 786 retracements at 70, basically 77, 76.98. Initial resistance now comes in at 78.17. The weekly open, the monthly open, excuse me, comes in at 78.13. So initial resistance, bearish invalidation for the bulls to reassert control, for there to be a suggestive low in place and a larger reversal underway. The bulls would need to clear 78.75, 78.73. That's the October, November lows, the December close low, and the basic 38.2 retracement of the yearly range. Nice pivot in price there. So really well mapped out levels. You're checking near-term confluence support right now. Look for a reaction here. If we're heading lower on this stretch, like right here, rallies, any kind of bump back should be limited to 78.13, 78.17. Close below 77.72 opens up the legs for the downside in dollar Swiss. Mesfin, Kiwi dollar. We looked at that together yesterday, yeah? So I put this in the same zone as Aussie. I'm expecting the same kind of price action. So yesterday we debated, is this breakout legit? Watch the close with regards to 59.28, 59.35. We closed well above that zone. Keeps the breakout in focus, right? Is the momentum here? Not quite. Ooh, right. Oh, yesterday we were about to pop through, but we didn't. So we're right there again. So same exact trade on this move. Mesfin, if dollar Swiss, if Kiwi dollar is heading higher, initial support 59.35. I'd want to see the weekly. I keep saying weekly. The monthly open hold support. The monthly open here comes in at 59 proper, 59.08 right there. I'd want to see that hold support if we're heading higher on this stretch. But bullish invalidation is at the weekly low. So same as yesterday. Same as yesterday. Initial support. Want to see the monthly open hold if we're heading higher on this stretch, for the bears to kind of peek their noses and tempt a pullback, a breakback, suggest a high is in place. You need to break below the weekly low. That would necessitate a break below that slope, and would certainly turn things over from a momentum standpoint as well. Make sense, Mesfin? Near-term resistance on the upside. You got 60 handle, again, psychological barrier. It's also the 786 retracement, but the big whopper zone is 60-60, 60-63. You're talking about the high day close for the year. You're talking about the 100% extension off the low. You're talking about uptrend resistance into mid next week, right? Basically Tuesday into Thursday is when you start to run into that major slope resistance. That's all contingent on a continued hold above the monthly open. Mesfin says, makes sense. Thank you, Michael! Exclamation point. Right on, brother. All right, real quick look back. We've got 7 minutes left just on gold. We're at resistance right now. So the breakout we talked about earlier in the week, we were looking at this basic level at the April open, 46.69. Downtrend resistance was there. Recall that for gold, the basic premise ever since we opened up the week was that we are heading into major support. That level was the 2026 low week close. The 618 retracement, the advance off the low we made in October of last year, the 2025 high close, all of it resolves right there. And so we were looking for a reaction there when we dropped into support last week. Here's the daily chart. The start of the month, checked it again. So last week we checked it, then we tried it again and started this month. Here's the breakout of the objective weekly range high, of the objective monthly open, and on the near-term chart, of downtrend resistance. So the first level we had talked about as sort of a key hurdle to look for was 47.42. We're checking that right now as we talk. So we're at resistance as we speak. So what does that mean for us now? Well, 46.69 should technically be support on initial pullback. If we're heading higher on this stretch, I don't want to see anything below the objective monthly open. That comes in at 46.22 right here. And for the bears to reassert, key support is still key support, 44.92 into 45.40, still absolutely critical. On the upside, if we resolve a close today, northbound to 47.42, it does keep the bulls in control. Keep in mind the momentum hasn't broken to overbought yet, but if it does break into overbought territory in the 4-hour chart and we resolve a 47.42 close on the day, that would be further fuel in the fire for a test of key resistance. That doesn't change. That's still 48.55 into 49.10. That's what caught the highs last month. 100 off the low, 618 off the high. Favorite fib confluences, major pivot zone in price. That's still key resistance for gold. Questions on gold? All right, last but not least. So the straight talks continue to go on. Some ships coming through. You're getting the headlines dribbling through. The markets are kind of bypassing all this and kind of giving this the benefit of the doubt. Here's what oil looks like on the 4-hour chart. So the level of support that we had talked about and the pivot zone ever since the whole March 9th fiasco has been right here. And we're testing it again. We tested it yesterday. We're testing it again today. That level is 90.79 to 91.78, the 2023 high day close and the 2023 high week close. It's been a very decent pivot in price. We're testing it now. If we give way, opens up for slope, comes in near 85.90s, let's call it, 85.87, 85.90. And then the key pivot zone, which was tested in March, which was tested in April, comes in at 79.60 into 80.75. Below this zone, and you're looking for, downtrend resumption. That's a new low. You'd expect for that scenario to actually manifest, for there to be some sort of rock solid or lasting resolution that comes through from the agreement, but that remains to be seen. So if this is your cup of tea, those are the levels to consider. As for me, just makes for some good popcorn. For now. All right. 3 minutes to spare. Any other questions or trade setups? Do let me know. Keep in mind, again, that non-farm payroll report hits tomorrow at 8:30 Eastern. Canada employment data hits at the same exact time. We'll pick up things tomorrow, again, same time at 9:30 Eastern, back at the opening bell to see the aftermath of that release. Stay nimble. The opening ranges for the month are still just taking their shape, and we are heading into the weekend. So we'll pick things up tomorrow. Best of luck trading, and I'll see you then. Cheers.